Okay, 10th of March, Rudy here. Welcome to the Daily Public Investment Show, where we go through ASX US indices, sub-indices and commodity prices, looking for places to invest. So we've had a bit of a relief rally today, so a bit of sigh. The daily, so that's the weekly, so the daily chart. So a nice recovery. I think we're probably in for just a bit of this type of action. We'll have a look at the American market for guidance a little bit soon. So we need to fire up, we need the financials, so the XFJ, which sort of, I don't think it's going to crash, but I think sideways action. The materials sector, maybe a little bit more consolidation, then start its run again. The energy sector. So long term, I think the bottom's in from a long term perspective in the energy sector. We'll have a look at the oil price later. Our gold miners, Aussie gold miners, bouncing off support. Our Aussie tech sector, putting in a nice, lovely rounded bottom. If we do our little game comparison I've got going on, divided by the NAS, the NDQ. So I'm having just a bet with myself and the rooster that I reckon Aussie Tech's going to outperform the NASDAQ. Not because we're better, just that I think we've been oversold too much and our money needs to chase something. Our tech sector over the ASX 300. So I think that, so it looks like our tech sector is nothing compared. It's not going to make a dent to the index, but I just think if I was a fund manager wanting to outperform the index, I'd be having some weightings to it. Okay, America. So the VIX, so look at the daily chart. So the VIX had the spike. So it still hasn't come all the way down. So it's not, we're not out of the woods. Once it comes down here, then that'll confirm the bottom's in. So if we look at the S&P 500, so it had a nice bounce last night, but you can see here the 20s crossed down below the 50, which is, well, so if we look at the last time that happened, which was back, back in March last year, we had this thing, but we've also avoided, like in the past, you can see here, so sort of where we are now, and then it just rallied back up. So this week will tell us, I think, what's going on with America. Come back to here. Come back. Okay, here we are. So really what we're looking for this week is to take out this, well, 6,900 would be a nice number to get. What we don't want to see is sustained move downwards. But so far, so good. The NASDAQ actually looks fine. And that's, so the Magnificent 7, so they've hit their 50 week, so they look pretty solid. Nvidia, I think that's just sideways. It's pretty boring, really, the Mag 7. So they need this sector to get going, the XLF, the financial sector. So it has, so if we look at JP Morgan, so JP Morgan's trying to trying to get its way back up above there. The software sector, part of that little subsector of the Nasdaq, had a strong bounce last week. So this is the AI fear trade. So it looks like that's going away. Materials in America, so they're having a bounce. Utilities, so utilities doing well in America. Energy stocks still hanging in there. The global gold miners, so they're bouncing off support. We've got here, the healthcare. So the healthcare sector got a bit of a walloping last week. There's some nice little things in there here. So I think that'll bounce back. So really the S&P needs this sector, the mid-caps IWM, to get some giddy up. So this is the mid-caps over the S&P 500. So it needs to start adding to the index for the index to help rally. China. So China's trying to eke out a bit of a bottom here by the looks of it. Israel. So the Israeli stock market, all-time highs. Make it what you want. Emerging markets having a bit of a bounce, so that's all positive. VDHGs, so your high growth super fund, nice bounce. So this is so materials over your high growth super funds. So materials outperform, but I reckon if you're going to keep watching this, you'll see materials. You want to have your super fund with a materials focus. VGS, so good old VGS having a bounce. So the same materials over VGS. I think we'll find over time materials will be outperforming VGS. Okay, interest rates. So Aussie 1 year rates 4.36. Aussie 10 year. So a bit of a pullback, with the oil pullback, but it doesn't look like they're going to go down anytime soon. US 1 year rates look more bullish than bearish. US 10 year, so just chilling but held support, which is biased to up. The US dollar, so having a bit of a move away from the safe haven, so that short term top. I don't think it's going to crash though. So that leads us through to the Aussie dollar. Is he going to rev up and break through resistance there? It's pretty heavy resistance. The Bible, so the commodity, or your commodity index, about to make highs here. So that's where you want to be invested. $10 a month, join the channel, ASX US shares, ETFs. It's come join, please. So gold. So the gold price. So we've got a bit of a pennant here. So you don't want to see gold dropping below 5,000, I guess. Nice round number. So far that looks good. Aussie dollar gold looks good. Bitcoin. A break above 74 for Bitcoin would signal a buy for Bitcoin if you're into that. The girlfriend. Oh yeah, this is something I find quite funny. I bet he's thinking about other women. I really need to buy more silver stocks. That's what the rooster does. Anyway, silver looks good. Chinese silver price in US dollars is 100, so $14 premium. The gold silver ratio, so I am expecting, so coming down means silver is outperforming gold. So it's at 60. Again, by the end of the day, it'll be down to 8. That's the rate it's mined at. Platinum looks like it's putting in a bottom. Palladium, same. Copper. So copper's had a nice big. We got some interesting candles here. So we've got good buying down here, and we've got good selling up here. My bias is to the upside, of course. AI is going to be the big. It's where all the money's going, into AI, and it's going to need a shitload of commodities and energy. So that's the way we're playing it. Oil. So oil hit that 120 mark. So it's quite funny, really, isn't it? We're panicking. I mean, there was only 2022. Oil was at 120. Now we think it's the end of the world. Anyway, was large. A lot of that is driven by leverage. So this is the core volumes on oil. So everyone's levered up, going long. So of course they're going to get wiped out. That's just how it works. So I don't think oil's going to crash. If we look at, this is the December crude oil price. So you can see, so the spot, that's the current price, got up to 120. The December futures price got up to 76. So the futures market is putting in a $70 oil price by December. So they reckon it's going to be back around here again. So just something to be aware of. American natural gas prices have come back. Asian gas prices, though, spot prices, they're still up. East Coast gas prices down. Iron ore. It's strange, isn't it? I think iron ore is going to go up. Oh, you're full of shit, Rudy. Lithium. So it's at all-time highs. Uranium, pretty boring. Thermal coal. So thermal coal's right at resistance here, but that looks more bullish than bearish. A break of a shooting star candle is very, very bullish, right at resistance. Got some coal stocks in your portfolio. Coking coal doesn't look great, so you want to be on the other side. Nickel, looks like it's forming a bottom. Aluminium consolidating at the highs. Tin forming a bottom. Manganese, he's finally joined the party. So you got your manganese stocks, and then we'll finish off with our foods. So soybeans having a bit of a chill. Corn having a bit of a chill. Wheat, so they're all having a bit of a chill at the previous highs. Hogs, not yet to break out. And a new one you didn't want to miss out is sugar. So sugar this week is now starting to join the food party. All right, if you enjoyed that, give us a like. Otherwise, join the channel. $10 a month. All right, see you guys.